Hello everyone, welcome to Red Summer Holdings, a real estate partnership comprising of 8 owners, Tochi, myself Zoe, Ramad, Charles, Ikechi, Chima, Innocent, and Ike. Here we discuss the evolution of our business, which shows you how group economics can be successful in regards to real estate. If you believe there is value in this information, please like, comment, share, and subscribe. With that being said, let's get to the content you've all been waiting for.
All right. So
Okay, I'm gonna keep mine short and sweet. I'm pretty much in the process of trying to find a property. I've put in a couple offers, and apparently the Memphis market is super hot. So people have just literally been coming with cash and, 5 to 10,000 over the asking price and just like beating me out. But I'll just like present on one property that I liked a lot that I unfortunately lost out on due to me being a conventional financing or having a conventional financing structure as opposed to having all cash. So maybe you guys could share the link or the screen with me. Okay.
Yeah, 1 second.
he's on it.
Yeah.
I always wonder when there's a market where a lot of properties are getting offers like significantly over the asking price. Like, is that a good thing, or is that like just, a bad broker or agent? Like, if I'm getting offers like tens of thousands of dollars above what you listed my house for, am I supposed to be happy with you, or am I supposed to be upset that you didn't list it higher?
I honestly, I don't know.
That's a good question. I mean, at the end of the day, though,
Yeah.
but
If it's I mean, I agree with you, IK. If that market is hot, I'm pushing the prices as high as I possibly can. But then again, depending on where you are in the Memphis area, it seems like those prices have been super inflated. Maybe Chuck could speak more to this because, I guess he bought his some years back, and I want to say his was in the 60 range. And the zip codes that I'm looking in now are similar to the ones that he, purchased his properties in. And I want to say that those prices have damn near doubled. I don't know if Chuck could, if Chuck has like a recent analysis of his properties that could give us some foresight as to whether they have indeed doubled. But yeah, going back to IK, I would push that thing as high as possible. I was looking for that money.
Like, theoretically, I'd prefer, my property sitting on the market unless I like needed the money. I prefer my property sitting on the market for 30 days and being considered overpriced and having to lower it than being, I guess, surprised that people are willing to pay more for it.
Yeah, like there's been, for the most part, on average, it's like I want to say 7 to 10 bids on properties that I've been looking into.
I was going to say, like, I guess it's a welcome surprise. Like, if you end up finding out that your property is worth more than what whatever expert thought that there probably would. If there's more money on the table, I would think you just be, you take it. Everybody would be happier.
Yeah.
That's the same thing I thought about when I don't know if you guys remember when Facebook IPO'd, but when they IPO'd, they were like severely under. And so on the secondary market, those shares got bought up for a significantly higher price than what they opened for, like initially. I know they have their ups and their downs, but my point is like, so is it like, did the investment bank do their job?
Yeah, I mean, that's a different scenario because with that's more of like almost like a marketing tool for IPOs, because when you see the headline, oh, Snowflake IPO for 200% more than the shares initially sold, it induces more people to buy, because that's like a public market where like, oh wow, this thing's popping, oh okay, these IPOs are hot. Whereas in real estate, it's just one person ultimately buying, or a few people putting in bids. So I don't know if the marketing aspect of it works as well in real estate as it does with those public equities. But I see what you're saying though. Like,
oh, you're saying they did it by design? So it's by design.
Yeah, they do by design. So like when you're IPO, the investment bank will take the CEOs on a road show to several different investors and say, hey, you guys can buy it at this price. there's a good chance that, you know, it'll do well in its IPO day or whatever. And so it induces the you know, the buy side. So like your Fidelities or Vanguards that they go to to sell shares before it even opens, to buy us a big lots, so that they know that those prices are gonna, you know, appreciate when it hits the public market.
Oh, that makes a lot more sense. Because
I mean, it's kind of it's collusion. It's collusion between the investment bankers, the buyers of the shares, as well as the people that are going to retain shares inside the company. Because, you know,
but it's for effect. So like you have already purchased your shares, and then you want these other ones to go up so that your value, the property, the value of the ones you already purchased. Okay, not like you missed on the value yourself and then gave it to the market.
Yeah, because you only, like, whenever you IPO, you only sell a small portion of the company, like maybe 5 or 10%, depending on how large the company already is, goes to the public market. So if IPO pops 200%, that's only 5% on the public market popping that much, and the other 95% is held by, you know, boards, executives, private companies, so like VCs and stuff.
All yours, Ezra.
Okay, all right. So let's see. Where should I start? Maybe I'm gonna start off with IK's list actually that he made. Let's see, where did I put this thing? Oh yeah, so like the steps that I'm on currently. So identify investor focused real estate agent. That was pretty easy because I'm just going through who Innocent found, which is Nadia, and she's pretty hardworking. So yeah, she's pumping out a lot of work right now, like every 2 seconds. And actually at 11 a.m. she wants me to do a walkthrough, so I have to be out by that time. Let's see, spoke with an agent on the phone, explained my investment goals. Yeah, so she understands my goals, like I'm looking for investment property that's cash flowing. So for me personally, I'm looking for either a small multifamily that's cash flowing or a single family. So either or. So she's been feeding me with those properties. I've only seen a couple of duplexes that I somewhat like, you know, and then mostly right now, my mind is just like on getting a single property or single family. Obtain access to the MLS. She's helped me do that. Identified a property I was interested in. Yeah, so anytime I'm interested in something, I literally like analyze it, see whether it's cash flowing, and then I'm like, boom, hey Nadia, I'm interested in this one, and I'm pretty quick to put in an offer because like these houses are being scooped up like really fast. But anyways, I'll show you guys the property that I was interested in.
So you buying cash?
No, bro, I'm trying to, because like for me right now, like a lot of my money is stuck in stocks that I believe in. So I don't want to do the cash route because I feel like the upside potential for the stocks that I'm holding are high. So yeah, not doing cash right now. I'm actually just conventional loan 30-year. That's what I'm trying to do. It's pretty hard though, because I keep getting outbid. Anyway, yeah, so this is 3994 Camacho Road. Sorry guys, excuse me for a second. Hold on. All right, sorry about that. Yeah, so 3994 Camacho Road. This is a 3-bedroom, 1.5 bath house, and this is in the 38118 area code. I actually had talked to Chuck a while back, and he had recommended some zip codes for me to look into. And so I believe one of them was 38118, and 2 others that I like that he had mentioned was 38116, 38112, and those areas are, you know, I guess even from my research on YouTube and just reading about the zip codes and such, those areas are good for investors, and about 50% of the people in that area are renting. So, I mean, obviously it's good to invest in an area where there's a high rent rate. To me, 50% is high, so it shouldn't be difficult in finding a person that wants to rent in those zip codes, and they're fairly safe. Good schools in those areas. And then again, we also know, you know, FedEx, we have the e-commerce thing going. So, you know, Memphis is like a hub for transportation of goods and services. So a lot of blue collar jobs in that area. But anyways, we could look at the pictures of the area. So this is the property right here. It looked like just really simple, like, you know, nothing, clean base hit, you know. It didn't look like it was in any disrepair. It looked solid, but of course I would still be doing an inspection on the property at some point. So it looked pretty nice. And then looking at a street view, to me, the area was pretty decent as well. Let's see. I don't know, it just looked really orderly, in my opinion. Let's see, let's walk down the street. So you guys, I mean, you guys get the overall picture. It's a nice looking neighborhood. So I actually bid on this property at this full amount of 93,000 or 93,900. And I was beat out by a cash buyer. Again, you know, all the sellers prefer straight up cash right now. So even if you're to offer like 5,000, you know, above the asking price, if it's financed, the seller is not going to take it. They just want cash because there's, you know, usually it takes what, like 30 days or something to, you know, completely close with appraisals, you know, inspections, et cetera, all the paperwork. It just takes longer and people just want that, you know, fast money. So that's what's been happening to me. So right now I'm just stuck on, you know, viewing houses, putting in offers and getting declined. So I don't know if you guys have any suggestions for me of how I could get this thing done. I'm down. Anyways, price per square foot is 78. The estimated down payment would be 20%, so about 18 grand. Estimated loan amount, 75,000. And then, so for me, for this particular one, I used just Ally Bank because right now I'm still in the process of using, getting pre-approved by Delmore Mortgage. So I actually put in the paperwork on Friday. So by Monday or Tuesday, I should be pre-approved and I'll be able to use Delmar Mortgage. So they're based in St. Louis, but they also work a lot in the Memphis area. And I actually got this suggestion from one of my buddies at work that has a handful of properties in that area, and she used this particular mortgage broker. So, and then go ahead.
No, I was just going to mention before we got too far away from it.
Yeah.
Because you mentioned, you know, you're getting beat out by cash offers.
Yeah.
And that, you know, you would have the cash, but that you have like stocks that you're holding that you would prefer to retain as opposed to selling them off, you know, paying the taxes or whatever, and using that cash for real estate.
Yeah.
One thing that we've done with some of our clients, in fact, we're doing it with one of our clients right now because he's trying to buy a ranch. What we do is we create what's called a pledged asset account, a PAA, and depending on the holdings within the account, you can take a loan against your equities with, you know, different specifications. Like I think 70% LTV for depending on the holdings, or, you know, up and down from there. And I mean, the rates are, you know, 2-3%, not very high rates, depending on how much it is. So like the higher, if you're doing it in the tens of millions, it's going to be much lower. If you're doing 100,000, it'll be a lot higher in terms of rates. And what you could do is, if you're able to do the pledged asset account, go through that process, take that, what's effectively a loan, and couple that with whatever you would have for down payment to purchase a property, straight cash. And then after closing, you can refinance, pull that money out that you used from your PAA account and replenish that line of credit against your holding. So it would be temporary in the event that, you know, whatever stocks you hold actually went down in value. Because then obviously that's an issue, because that's what's backstopping the loan on those assets. But if you do it temporarily and refinance the property, with a conventional mortgage, get that cash out and replace the money you used from your pledged asset account. You could use cash for the initial purchase, but also retain the stocks that you have that you're borrowing against.
Oh, well, I'll have to talk to you in depth about that then. See what.
Right.
Oh, thanks, bro.
Yeah.
Okay.
And so your estimates here are 20% down payment. Is that what the conventional lender is going to do?
Yeah. So
20%?
yeah. So with the conventional for Ally, so I just use Ally Bank to just have a lender that, and they've already pre-approved me, but their bottom, like their lowest that they could do is 75. So I'm just like on the borderline of that. With the Delmar mortgage, theirs is like 60. So they wouldn't mind. So that I prefer to actually use the Delmar mortgage because they're more, I guess, amenable to me having a lower, balance, overall mortgage balance of 60 as opposed to Ally, which they want their borderline is 75K, if that makes sense. Yeah, so yeah, okay.
No. You're talking about hard numbers. What I'm talking about is percentage down. So LTV. So are they willing to do, what is the highest LTV that the mortgage lender is willing to do?
So the highest LTV
Because in your estimate here,
for this property,
yeah.
70. Oh, from I don't
Like
know.
because this LTV here in the estimates is basically 80%. That's an 80% LTV, which is that's why I was asking you, because maybe you found somebody who's willing to do that. The highest I've seen so far is 75, but I haven't seen anyone recently willing to do a loan to value of 80% on property. That's why I asked, because it'll change your cash. It'll change your cash position. You'll probably need to put in 5%, at minimum 5% more cash. No, so put your cursor on the one right above it.
This one?
Yeah, 25, and turn that into 25 or 30.
Oh, okay. Yeah. So Ally was willing to do 20%, bro.
Oh,
yeah.
okay, bet.
Yeah. They actually, because I wanted to put 25, but they wouldn't allow me for this particular property because if I put
because
25,
then it puts over the limit, and then they need to have a minimum balance in order to make money. Sort of the same problem that IK ran into.
Exactly.
Okay.
Yeah. So go ahead.
I'm sorry. So, and are you buying this under your LLC or under your name?
So my plan is to buy it under my name, but as soon as I buy it, I'm going to form an LLC and then put all the properties in Memphis into an LLC. That was my plan. Yeah. Let's see.
You got to check with the lender. Sometimes they won't let you change title if there's a loan on it. So just like some don't care, some do. So just be careful with that.
What did you do, Chuck? Did you do it under your name or did you do it under LLC?
So the stuff I got in Memphis, I bought them cash in my name. And then on 2 of them, I took out like a bridge loan for like 8 months just to kind of, help with taxes and like invest in my business. And when I did that, as part of the underwriting for refinancing, I changed the title over to the LLC that I formed. And then I paid them off. So now that property's free and clear again, but it's still under an LLC.
Okay. Good to know. So I'll ask them about that.
Yeah.
I would say so. Like I wasn't sure either because I wasn't sure like if I needed to own the property outright to transfer title. So I asked a lender because they said they've worked with some investors who've done the same thing, and she pretty much said that it's possible that I can do it in the transfer. And she gave me like she's like if you run into problems, she gave me a lawyer I can contact who does all this stuff. So ironically, she was the same lawyer that the previous property that I was going to buy was using for the title stuff.
Okay. Yeah. That's dope. Okay, good to know.
And just for my knowledge, you can just have an LLC, right? Like you can have one ready before any deal is closed, and then now you have a shell for when the deal does close, right?
Yeah, no, I agree, but for me, it's more so like I want to have as much like liquid cash possible now, even if it's freaking $800, just in case I need it for anything house related, for the property that is the investment property. And then I'll figure out the LLC later. Let's see, where was I? Okay, so estimated down payment, I just put 5K because that house, just from a bird's eye view, seemed pretty decent. The roof, etc., seemed decent, but again, that I mean, I guess on inspection, I'd get more detail in regards to capex, but it seemed decent. The price again of the unit, we already know what the price is. Last sale for this property in 2002, it was 49K. So yeah, that's doubled since then, almost. Days listed 47, but this is old because this thing has already been bought actually. According to the seller, and this is information I got from Nadia, the realtor, it had gone off market like in 4 days, but then I guess the person that was paying the seller cash had a family emergency or something like that. So it ended up falling through the first time it was on market and came back on market. So I guess they counted all those days for 47 in regards to days that it was listed. And so number of units, 1, again, 3 bedroom, 1.5 bath. So in this area, I used the bigger pockets calculator, and the median price was $850. But in these 3 zip codes, you could get monthly rent as high as $1,100. I don't know if Chuck wants to confirm. I don't know how much you're getting from your properties, but that's what the calculator had stated. So I just put in the conservative price.
Yeah, so I'm not in those zip codes. Your price point's a little higher than mine.
Oh, really?
Yeah.
Oh,
so I'm playing in like in the lower, like the lower purchase price, lower rents, but you know, just straight cash flow. Like I care about like the maximum amount of cash flow possible.
Okay.
So the problem you're running into with like certain banks wanting a minimum floor, like I know that I would have that problem. That's why like my whole thing is buy cash, get in, and then do some creative stuff after you own it. Whether it's like, you know, wrap it into the portfolio loan, or get like, I'm going to try the business loan backed by real estate. I'm going to try that out actually on the next property, the thing that we talked about a couple weeks ago. So
yeah. I mean, that's what we should also think about too. Like just, you know, that business line of credit, man. I think that
it's what's funny is it's actually pretty similar to what Ike was talking about with how his company can basically collateralize anything. If it's got value, we'll give you a loan against it. So you're kind of circumventing, you know, the traditional, you're able to buy like you have cash, even though you're leveraging something else you have that has value. So it kind of just, it reinforces kind of like the underlying theme, right?
Yeah.
Own stuff,
yeah, exactly.
Right?
Yeah.
Own stuff that has value, and you can get loans against it to buy other stuff that has value. You know what I mean? So
as long as you got equity, you got options.
Exactly.
Yeah, true story. Okay, so the property tax on this, let's see, why did I put 450? I want to say that I like increased it purposely, but I think it's like less than that, according to, so what, 78 times 12. I'm tripping. Property taxes. 78 times 12. So this is actually 90. So I actually made a mistake. That's actually like 1,000. All right, so I actually made a mistake. Okay, and then insurance 612. Estimated repairs and maintenance 612. And this is yearly. And then estimated property management costs, I just put it at 10%. I don't know what the charge is, but it seems like the property management fees, from my perspective, it's usually between 8 to 10%. If someone has a lower price, let me know. But just going back to what IK said, like some months back, it's better to, pay a good property management team that will actually maintain your house. And then I guess as best as possible, or your investment property. And so I was just leaning towards going, using Chuck's people. I want to say, was it Lyco something, or Lico something, Lico Property Management, but I haven't really delved into, their costs and stuff. But I'm sure 10% would be more than enough. So let's see, estimated NOI is probably gonna be different now. So let's see, 10,200 minus 612 minus 612. So it comes out minus 1020, 6956, 6956. So that's how much it is. All right, so potential yearly earnings is saying this is going to be about 4K, estimated retained earnings 3,500, cash flow 299.50. And for me personally, like, I'm honestly good with, if I'm getting $100 per door a month on a single family, I'm fine with it. So that's cool, I guess. So if anyone has any objections, holler. Cap rate 7.41%, cash on cash 19%, and then cash on cash with capex return rate 15%. Yeah, so that's pretty much the one that I want to show you right now. I'm still in the process of putting down offers. I need to probably like find creative ways. Probably gonna talk to IK a little bit more about that pledged asset act thing, so I could actually get my foot in the door and buy a property. And then I don't know if you guys read the article, but this Mullen industry or technologies are planning to start a EV like factory in the Memphis area. I don't know if it's going to happen for sure or not, but I think the fact that, an EV company is thinking about coming to Memphis, Tennessee, I wouldn't be surprised if other EV companies, come to this area, because it's most likely tax favorable for them. So that's better upside, more jobs being created, better upside for us long term. So yeah, that's my update. So hopefully before April, I could get an offer accepted and actually buy a property. Does anyone have any questions?
That seems pretty solid to me.
Yeah, what's up?
Yeah, quick question. I haven't looked at Memphis like that, but what I was seeing in Florida is that, because when I was coming into this, like, I saw properties that were cheaper, like $50,000, $60,000. Yeah. But obviously you can't get financing for that.
Yeah.
Are there some properties like that where, like, it's probably like $50,000, $60,000 and it's renting for like $850, where you could just buy cash?
So for me, I haven't, let's see. That's the funny thing with me right now. Like, in regards to cash, I've seen those properties, but I haven't seen properties that are renting in the 800s that are worth 60K. It all depends on zip code. At the end of the day, like this, I feel like Memphis is very zip code dependent in regards to like the price of property. So if it's 60,000, you're probably going to see something that's in the 600 range in regards to rental income. If it's 50,000, I mean, that's still good return, but I don't want to have to deal with a house that I need to do any sort of major repairs on. And that's what I've been seeing right now, because for the most part, those houses are being scooped up super quick, if that makes sense.
Yeah, if you want $800 off of something you buy for 60, yeah, it'll be one of those like shotgun style duplexes where It's like a 1-bedroom on each side and they're paying, $450 each or $400 each. Like one of my duplexes is like that. It's like a mirror image split down the middle, shotgun style duplex. And I think I get $455 on one side and $425 on the other. And that one, I think it appraises now for like high 50s, but I bought it for 39 back in 2018.
What? Yeah. Do you have to do any like renovation, like major renovations on it, Chuck?
I had to do a little bit. So like, I know that the floor was like weak. So like the previous property management company would show it and then nobody would rent it. And they'd always be like, I don't know why nobody wants to rent it. So then I fired them and got some more people, and they were like, hey, like these 4 things are wrong. So, you know, I paid some money. I probably paid like $3,000 to like raise the floor. And then like underneath the house, I guess the support or whatever was rotted out. So they fixed that. And then they cleaned up the bathroom a little bit because the tub was sinking as well. And since then, yeah, I've got it rented and I haven't had any issues.
Yeah. But I don't even think that's like even a major like renovation. To me, it's like more so like pipes, electricity,
Roof.
like foundation.
Yeah.
Roof.
Yeah. It to me, like with these houses, it's going to be roof and plumbing.
Yeah.
So the one, go ahead.
I'm sorry, I've been found that some foundational issues are not that expensive, right? And I'm just saying, I was watching this show on, I don't know what it's AGTV or I don't know what channel it was, and they were buying this house in Texas, and the house had some houses have foundational issues, and it cost them like $4,000 to do the work. And I was thinking like foundational issues were going to cost you like
Texas?
10. No, Texas.
Oh.
I just personally thought it was going to cost you a lot of money. But I think this depends on what it is. Sometimes it's not that much money.
Yeah. All right.
Yeah. What I would say with stuff like this is like, it's kind of weird. Like, it doesn't matter if it's a good neighborhood or a bad neighborhood. Like a roof costs what a roof costs, pipes cost what pipes cost.
Yep.
So like with the ones that are like, you know, the cheaper properties that you can get your hands on, a lot of them quickly, that's where you can really make or lose your money, because, you know, if you have to pay like 10 grand unexpectedly to like just completely redo the whole roof, like that could kill your entire year. You know what I mean? Because the rent might not be strong enough for that. And not to mention, you know, you probably have to get them out of there, and it won't be habitable while you're doing that. So
yeah, you
do have to be a little bit careful with the cheap stuff. But like, if you are doing your preventative maintenance and sticking to your maintenance schedule, you could do really, really, really well.
Yeah.
Have you guys consider something like, I was thinking about this is just me thinking out loud, a situation where, you know, let's say you want to rent your house for say $850, that's kind of your goal. But so you, instead of doing the $850, you put it on the market for $875, and then say that if your tenant gets renter's insurance, then they can rent the house at $850. Renter's insurance is like, it costs, it's mad cheap, like $10 a month. So that kind of protects you if anything goes wrong and they have to leave because they have renter's insurance, right? So that's something I was thinking about as a way to have your renter, like, you know, it kind of puts you in a way where you don't have to do like landlord's insurance or anything like that if something goes wrong.
But doesn't their insurance cover their personal property? Like if there's a fire and like, from my understanding is, as a renter, if I get renter's insurance, it covers my stuff. So there's a burst pipe, my TV gets screwed up, it replaces my TV. The building itself, I don't think my renter's insurance is going to pay my landlord or the owner of this apartment that I live in. Like, they're like, you're on your own, Jack. You know, like, that's my understanding of it, at least.
Yeah, well, I was wondering, could there be a gap, right? So if you have to replace the roof, instead of you housing your tenants in a hotel for like 5 days while they're fixing the roof, their rental insurance covers that 5 days for them.
Oh, got it.
You know,
okay, that might be true. That makes sense, actually.
That's what I was thinking about. I don't know. I haven't looked at it, but I know rental insurance is cheap. Because I was just thinking I could get some rental insurance for myself because I'm renting. So I looked into it a little bit. I saw it was cheaper. But I don't know everything that it covers.
I can say that, and this isn't even from the investment side, it's just from where I live. There was like a leak in our closet, and I tried to get them to pay for us to stay at a hotel while they fixed it, but they said that's what your rental insurance is for. So that might answer the question in that sec.
Okay.
There you go.
I believe this case is closed.
So they basically told me to fuck off.
Yeah, I think so. On the lease, you can probably just say we recommend you to get renter's insurance, something like that, or whatever your language.
The leases with all of the tenants that we house, it's implied that you are responsible for getting renter's insurance. So not only are you responsible for getting it, if you don't get it, you're responsible for whatever happens. You are your own renter's insurance, basically. The liability is not upon us.
Yeah, I just make my people get renters insurance because you never know when shit will hit the fan. Thank you for watching. Please remember to like, comment, share, and subscribe. Peace.